Nippon India beat its two larger asset management peers in the third quarter. At least the one key large one as well. This is despite assets under management declining on a year-on-year basis. Soumeet is here with an analysis of the performance of the asset management companies in the third quarter. Soumeet, good morning. How did these guys stack up against each other?
Well, good morning. So if you see, we have compared the performance of all the three AMCs that have come out with the numbers based on the four parameters. Firstly, on the asset under management front, if you see, HDFC AMC has outperformed the asset managers outperformed when it comes to the asset under management, because if you see, its AUM has grown nearly 12% compared to last year, and as against a 7% growth of Motilal Oswal AMC, and as against a decline of 13.5% for Nippon Life India Management. However, based on all the other parameters, if you see, Nippon Life has outperformed its peers. Now, its revenue as a percentage of AUM has increased nearly 0.2% compared to last year, as against a decline of 1.9% for Motilal Oswal, and against a decline of nearly 1.9% for HDFC AMC. Now, when it comes to EBITDA as a percentage of AUM, it has increased nearly 44% compared to last year, while the net profit as a percentage of AUM has increased nearly 58% compared to last year, thereby outperforming the peers, that is Motilal Oswal AMC and HDFC AMC. So what were the factors? Now, for Nippon Life India, asset under management declined compared to last year, largely on the back of declining debt and liquid funds. However, growth in equity funds, that is the most profitable funds for the asset management company, did lead to higher growth to its financials. The share of equity AUM to total AUM increased by nearly 6 percentage points for Nippon Life India. Along with this, strong cost control led by a decline in its employee cost also aided the profitability for Nippon Life. Now, employee costs declined for the first time sequentially in the last 6 quarters. So this is what made the Nippon Life AMC more profitable compared to last year in the third quarter of financial year 2020. Now, coming to HDFC AMC, the company continued to witness a growth in its asset under management, but at a slower rate. Now, the asset managers AUM grew 12% compared to last year, which is the slowest growth rate reported by the company in the last 5 quarters. Along with this, income from its portfolio management service segment also aided the financials compared to last year. Now, according to the management, the income coming in from the PMS segment tends to be lumpy and happens only once in a year. So that was one of the one-off factors that aided HDFC AMC's financial in this quarter. Now, for Motilal Oswal, if you see, regulatory clampdown did impact its revenue and operating profit, but due to lower tax rate in this quarter compared to last year, the division's net profit surged higher compared to last year. Lastly, coming on to the valuations of the pure play asset management companies, that is HDFC AMC and Nippon Life India Asset Management Company. Now, analysts continue to prefer Nippon Life India over HDFC AMC, but that is largely on the back of its lower valuation compared to HDFC AMC. However, the return potential for both the listed AMC is merely 1% for the next 12 months. Now, according to analysts, a faster ramp up in its market share will be critical for further re-rating when it comes to Nippon Life, because if you see over the past, Nippon Life has lost a lot of market share compared to its peers, and an earnings surprise improvement in its AUM mix and higher than industry growth rate is important for HDFC AMC's re-rating. So these are the key factors that analysts and street should look out for going forward when it comes to Nippon Life and HDFC AMC.
The return potential though for both is measly, even though they may prefer Nippon Life or HDFC AMC. 1.6 and 1.1% suggests that most of this optimism is in the price, at least as far as the sell side goes.
Exactly. Most of the optimism that they're expecting, or the growth rate that they're expecting from both the AMCs, are priced in at current valuation. So these are the factors, like for Nippon Life, a faster growth in their market share, which they have lost in the last 12 months. And for HDFC AMC, earnings surprise, stronger growth and strong AUM growth would be the key factors for re-rating going forward.